welcome along to our special non-farm payroll live stream. It is Friday the 6th of September 2024 and you've got a fantastic US session ahead, and it starts with the non-farm payroll jobs data that is about to hit the wires in 15 minutes time. I hope you've had a good trading week wherever you are joining from. Good afternoon to you in Europe, good morning to you in the States if you're joining us, and good evening if you're in Australia or Japan or wherever it is that you are. It's good to see you, and it's good to have your company for the non-farm payrolls. I do genuinely believe that we do the best non-farm payroll coverage, but I'm a little bit biased. We've got quite a lot to do today. There's going to be tons to get through, so let's just jump straight in and get on with what we need to cover today. We're looking for 160,000 new jobs to have been created in the month of August. Remember that 114 from last time around? Yeah, that was a bit of a bit of an explosion on the markets. We're also looking for a slight downtick in unemployment as well, 4.2% from the previous 4.3. But look at those average hourly earnings. That is the one that's really caught my attention. I normally only focus on one, but I've stuck both on the card for today. The year-on-year rate and the month-on-month are moving in tandem, so we're expecting a slight pickup in those earnings, 3.7% on the year-on-year and 0.3% on the month-on-month. Don't often see it like that, so we'll stick both of them on there for now, and we'll see what the numbers turn out to be in 15 minutes time. Okay, it's a very special day at FTUK because our Discord server hit 5,000 members this month. Really incredible. We started from nothing, so to get to 5,000, I don't know, it feels good. It feels really good. So we'd like to say thank you to everybody that joined our Discord. And what we're going to do is we're going to be giving away 5 10k accounts for people to trade with, and it's not difficult to enter. All you need to do is scan that QR code. If you're able to scan the QR code or click in the link in the description section of the live stream, that's going to take you to a form. And on that form, you'll be able to fill in your details and enter the competition. It's all there in front of you, basically. What we need you to do is subscribe to the YouTube channel. That would be great, so we can grow the YouTube channel. We also need you to follow our Twitter page as well. If you could do that and leave your email, and then you could be in with a shout of winning one of the accounts. Now, a slight change to the plan. I thought, okay, let's announce this. I was so excited to see 5,000 members. I said, let's just announce it all in the live stream. Well, we're going to do that, but we're going to do it next week. And the reason is, some bright sparks said to me, yeah, but what if you're watching the live stream on catch up later on the weekend? So if you're watching on a Saturday, or you're watching on a Sunday or Monday or Tuesday next week, then the competition, well, it's not a competition, but the giveaway will have been done. But so if you are watching this live stream and it's a Saturday or a Sunday or a Monday, then you can still be in with a chance of winning an account, because we're going to keep this running for the next few days. It was very popular when we started at the beginning of the week. So we'll keep the door open, and then what we'll do is we'll announce the winner on the next one. So we're not going to do one of those guess the number type things where we're giving an account away this week. We're going to do this. It's 5 10k accounts. It's fantastic, really good way to start off this fantastic season to take us into the end of 2024. So if you are interested, or that's all you need to do, scan that QR code and click on the link and then fill in your forms, or head over to Discord. Head over to our moderators. We'll take care of you on Discord. All of the rules that we've got, everything that you are going to need to know, is always going to be on our website as well. So all you need to do is head over to our website. You can see it there. It's been a labor of love getting that one running. It's looking pretty good though. All of the details that you're going to need on anything that we have to offer here at FTUK is going to be on there. You'll see the accounts, the 1 and the 2 step and the instant. You can buy one if you want to, but you'll see all of the rules that are going to be attached to these accounts that we're going to give away. We've got 5 to give away, and then if you scoot through the website, you want to see how things work with FTUK, obviously you can click on that. We've got all the different scaling programs. You get a 80% payout with the 2-step as well, which is what these accounts are going to be based on. So it's a great way to celebrate our Discord. Really good milestone to hit. So here's to the next 5,000 hitting 10,000 members, or we're over 1k on YouTube now as well. So it's good to see. It's really good to see. Right, okay. That's our main event for the day, aside from the fact that we've got non-farm payrolls to get through as well. So this is what we are looking for. We are looking for 160,000 new jobs. That equates to an unemployment rate expected at 4.2%. And then the average hourly earnings, as I was saying, moving in tandem. Don't often see it like that, so it's nice to get all of those things lined up for a change. Now, we've got 10 minutes to go. Markets are prepped, ready, and I want to just talk, before we get into the charts, I want to talk about context, because this is a particularly important non-farm payrolls. I mean, they all are important, but this one very much so, because of what we were anticipating from the Federal Reserve in a couple of weeks. We've still got another couple of weeks to go before we get an interest rate decision from the Federal Reserve, but we are looking for them to actually cut rates. That is something that the market has been waiting for all year. Now, I looked this morning because I get sent a lot of information, and there's a couple of quotes here that I got sent this morning that I think are worth just paying attention to. And the first one is from Nick Timoreos. He is the key journalist that you want to pay attention to if you're a trader. If you're not subscribed to his Twitter page, you definitely need to. He's what we call the Fed whisperer. So anything that wants to be sort of like side leaked out of the Federal Reserve tends to go through him. So when he tweets, you've got to pay attention to what he's got to say. So this is what he said this morning. Today's August jobs report will sway the Fed's decision on the size of a rate cut and could tee up a larger 50 basis point reduction in 2 weeks' time when they meet. That says a lot, and this is why context is so important. But decent hiring would keep the Fed on track for a 25 basis point cut. So if we're particularly hawkish today, we should be looking at a smaller cut. If we're dovish and we get a really bad number like we did last time out, then expect the cuts could be a bit more. It could be double. It could be 50 basis points rather than 25. Now, always bear in mind that the Federal Reserve, they can do what they like, but this is useful context, is useful information. This is why today is so important, because we've got cuts from the ECB and the Bank of England and all of those big guns. Even the Bank of Japan has started hiking rates. The Federal Reserve, they have yet to actually play. They've yet to actually make a move. And the market has been promised the end of an interest rate hiking cycle from the Federal Reserve all year. That's been on the cards all year. So the more we compress into the end of the year, the more urgent that becomes, which is why everyone is now sat at the table looking at the markets, wanting to make a return over the course of the next couple of months to end 2024 on a good note. And that's why there's a lot of focus on the data now, which is going to lead into that interest rate decision. It is absolutely critical. Goldman Sachs as well, this is what they said this morning. They are sitting pretty much on the dovish side, but they said if the unemployment rate is 4.3 or higher, or if it's 4.2 to 4.3, and the NFP is under 150, they would expect those 50 basis point cuts in September. So, kind of playing it both sides, but what they're saying is if we do get a rubbish number, you should expect something. So that is what the debate over the next couple of weeks is going to be all about. It's all going to be focused on whether we're going to get a big chunk of a cut or whether we're going to have small dribs and drabs coming over the next 3 to 6 month period as the Federal Reserve starts to roll over. So Goldman Sachs pretty much sitting on the dovish side. We've got 6 minutes to go. Just bear in mind the gameplay. I mean, we can't do analysis, which is a shame, but I can put some context around what I think is the tone of what's important in the jobs report, and that's absolutely critical. The market is in an optimistic mood with those forecast numbers, and that means that the focus will be very much on not if they're cutting, but how that journey is going to be. We're going to get a large cut first of all, that then is going to taper off very quickly, or we're going to start slowly and then very slowly carry on with the interest rate cuts. That is the debate that's going to go on very soon, and that is where the market is going to need to grapple with that, and is going to need to, and a lower unemployment number, that will be considered to be hawkish. Remember, hawkish is a stocks down, dollar up type of play. It certainly has been classically over the last 2 years, although it is starting to loosen a little bit, but that you can certainly go into a jobs report with that frame of mind. A low number, and that would indicate slower rate cuts. That would be a 25 basis point cut, and then maybe the next one out would be another 25. a low job number, as we got last time out, with an uptick in unemployment, or maybe those average hourly earnings just pushing to the downside a little bit, that would be a dovish play. Get on with it. We're causing too much pain. We need to start cutting a bit quicker. That's where your 50 basis points could maybe potentially come from, and that is a faster play. The market's got to grapple with that. So it's a challenging start to the last quarter of the year, but it's certainly where we're going to get some volatility, and that is what we are absolutely in tune with. So we've got 4 minutes to go, just over 4 minutes. So let's jump over to the charts and I'll show you what I mean. Now, I think if we are going to get an optimistic mood from the market, which we are getting, which is a slightly hawkish tone, I've got up here on my charts, I've just got dailies on here at the moment because I just want to just reference the fact that it's the S&P, I think, that has priced that optimism in. S&P down here on a daily chart in the left hand corner, the dollar against the yen in the top left, and then we've got euro dollar in the top right, and then also gold in the bottom right hand corner. If you look at that daily chart there, the S&P 500, you can see we just got that depression. That's that hawkishness, that optimism priced in, stocks down, dollar up type thing. But look at the dollar. The dollar's not been on a similar pathway. We've actually been having a bit of dollar weakness coupled with some euro strength, some optimism, and also some Japanese dollar strength, which has been much needed. But you can see it there in the euro dollar, and then also in the gold market as well. So for today, if we do get an optimistic report and it does play out the way that the market is expecting, I think the opportunities are currency based rather than indices. I think that is where the opportunities could be. Also, bear in mind, if you have to pick one, I would maybe be looking for volatility to be pretty strong for an opportunistic point of view over the course of the next week on the euro dollar market, because don't forget, we've also got the ECB next week doing their interest rate decision. We're above 110, which is a massive line in the sand for the ECB. 111.10 at the moment on the spot rate. So if we do get some traction today out of the numbers, that could give us some pressure on that euro dollar rate, which maybe could be then reversed as we go into next week. So those opportunities, I think they're FX opportunities for me anyway. But we'll certainly get volatility in all markets. So for me, it's not an indices play today. But I mean, I'm not trading it. Full disclosure, I'm not trading it. And I actually wanted to put a lot of analysis on the charts, and I can't. I'm not allowed to. We don't do analysis. We don't do analysis. We're a prop company. But it's a fascinating situation on all of the markets at the moment. Right, we've got 2 minutes to go, so we need to just start to get ready for it. I'm going to put all of these onto 5-minute charts so we can look at the volatility. Don't forget, we've got the dollar yen in the top left. We've got the euro dollar in the top right. And then, just make these big. I'm on Trading View today. Just fancied it, really. There's so many choices of platforms. Obviously, we do the best platforms. Obviously, DXTrade, CTrader, and also MatchTrade as well. So if you, they are fantastic industry-leading platforms. 1 minute 30 to go, and then we've got that gold market. Also as well, just to quickly note, I'm a follower of commercial hedgers. Commercial hedgers are extremely short this gold market now at the moment. Which means they're extreme hedging out the upside, which means we could be coming to a peak in gold relatively soon. Right, so I'm just going to tune into my squawk. Let's get that gold chart onto a 5-minute. Right, okay, so 55 seconds to go. Like that, the yen, he's going for it. He gets some of that dollar strength already. Looking for 160,000 on this print. 30 seconds to go. So good luck, everybody, if you are trading it today. And obviously, we do not gamble into the non-farm payrolls. I get tired of saying it. Don't do it. There's loads of opportunities later on in the US session. Tomorrow, well, not tomorrow, but you are in the crypto. But next week, there's loads of opportunities. Do not gamble into it. It's not worth it. Here we go. Stand by, everybody. 10 seconds. $142. Goldman called it. Earnings 0.4% month to month, 3.8% year on year. Unemployment rate 4.2%. 4.2% on the unemployment. Average hours 34.3. Participation rate 62.7%. Goldman called that beautifully. Revised down 25k to 89k. So the headline figure was 18k miss at 142k with the prior revised down 25k as well. The average earnings of 0.4% month to month, 3.8% year on year growth attempt higher. The unemployment rate in line at 4.2%. For Canada, the employment should change 22. Well, it's slightly worse than what the market was looking for. It should give us that dovishness potentially, maybe. Yeah, that yen coming off now. That dollar starting to weaken now. We've got some uptick in the stock market as well, and look at the gold as well. Really, really going for it. Look at the volatility there on that. This is why it's so hard to call, you see, and this is the sort of thing that you see on gold all the time. You see the spike here, the amount of people that get stopped out at the bottom of this leg on that kind of a move there, and then to see it go. And that's where you can then fall into the trap of revenge trading. It's a very, very dangerous situation to be in, which is, you know, you don't need, and when you look at candles like that, you can really feel like you're missing out. You get that FOMO thing, so all the people going long now there, and then bear in mind, we're at the start of a US session now. We've got a lot of trading to get through over the next 8 hours, and these markets, they can reverse very, very quickly as well. So definitely a interesting jobs number there for sure. Just check that out. So yeah, so we got a 142 from the expected 160. So it's certainly better than last month. The prior was revised down though, 25k. That was that 114. So that is particularly low. So 142 recovery is not too bad, but it depends on the revision for that for the next month. That's for sure. Yeah, in line on the unemployment, 4.2%, which is, and then the average hourly earnings, 0.4 on the month-on-month. Okay, so that's looking good as well. And then on the year-on-year was 3.8 versus the 3.7. So uptick, slight inflationary pressure. So that's going to be interesting to see what that maps out to over the course of the next few hours. But like I say, you know, you've got to, for me, non-farm payrolls is always stronger the week after. So you take that price range that we get from that initial bit of surge of volatility, and then you use that as a line in the sand for helping you map your trades on a Tuesday and a Wednesday into next week. And then with the volatility around the ECB next week, that could definitely give us a really good euro dollar market to be working with. Certainly intraday if you're a swing trader as well. So yeah, looking, wow, look at gold now. Oh no, sorry, that's the yen. Look at the yen. Gosh, what top to toe on that? That's 144 down to 142. So full sort of like 100. What's all that? So just get that measured out, top to toe on that one. It's a full 200 pips. Full 200 pips on one move. Gosh, that's volatility. But hey, this is it. This is where you get opportunities from, and we are in the right spot in the year now to start to get that kind of volatility. So yeah. It's definitely an interesting landscape. Okay, right. So I hope you managed to get something. If you were trading, you know, if you managed to get something out of the non-farm payrolls, then I really sincerely hope that you managed to do quite well on it. Now, let's just tie things up because we've got some other news as well that I just need to signpost, and that is that we've got a monthly contest starting very, very soon at FTUK. This is fledgling. It's still in its early development, but in a couple of weeks' time, we're going to get some landing pages created and start collecting registrations for a new trading contest that we are doing at FTUK. We have got thousands of dollars in cash prizes to give away every single month. So you can either be a paid client when you join us, and you can trade an evaluation account or an instant funded account and take the money out that way. Or alternatively, if you're a bit strapped for cash, then you can always join in our monthly trading competition, prove your skills, and then get a huge payout as every single month. We're doing it every 4-week period, and that's going to be starting in the next couple of months. The registration is not open yet. It's going to be limited to a couple of hundred customers at the most. So it's going to be a good idea to subscribe to the email addresses. And then you can be part of the loop when the information gets put out there about when the registration is going to start, because it's going to be a first come first serve basis. But they're going to be happening every 4 weeks, so everybody get a chance to have a go. And obviously the leaderboards will be sort of like populated with the people that are making the most money. That's what it's all about. So bear that in mind. Finally, as well, just do not forget, over the course of the weekend into next week, scan the QR code, click in the link on the description, and just register your email, because you could get one of the 5 10K accounts, which is a great way to start what is definitely the best trading season of the year. Super interesting stuff. Okay, that's it. That's everything we've got for now. So, interested in non-farm payrolls? As always, is it going to be 50 basis points? Is it going to be 25? We'll find out in a couple of weeks. Have a great weekend. Thanks for watching. We'll see you very soon.